Hey guys, do you ever wonder why you should start an LLC or a partnership? I am Amelia O'Leary and I get this question so often. Many people always say, "Hey Amelia, should I start an LLC? Should I start a partnership?" Many of you are going into business with friends, going into business with partners, and you're wondering which is going to be the best option for you. I am going to tell you what's unique about an LLC, what's unique about a partnership, as the considerations when you're thinking about either or when you are thinking about forming a partnership. There are things that you need to know. A partnership is not a form of business. A partnership is where you're coming together with one or more individuals and you guys decide to come together to start a business. And there are typically two types of partnership. There's a limited partnership or a limited liability partnership. A limited partnership typically has a general partner. The general partner is the person that is going to be responsible for the majority of a liability in the partnership. The others are limited partners, meaning they're only going to be exposed to an amount of liability associated with the amount of money that they invest in the partnership. The general partner is going to get hit with self-employment tax, that 15.3% tax, that sometimes can be a lot. The other thing that you need to consider is that partnerships are pass-through entities, and they're going to pass through to your individual income tax return, which is where you're going to be taxed. The limited partnerships are typically used for real estate syndications. So you may find where you get someone that says, "Hey, you want to come invest with me?" And real estate, the person that's starting the real estate is usually the person that's going to be the general partner. The general partner is also the person that has the control, the person that's making all the decisions. So when you're thinking about going into a general partnership, you have to remember you're giving up control. On the other hand, there's the limited liability partnership. What does that mean? That means that all partners are going to have a limited liability. Our liability is only going to be the amount of equity or cash that we put into that partnership. Limited liability partnerships are really good because everybody wants to be on an equal footing. But you have to remember that when you are a limited liability partnership, that all partners can expose the partnership to liability. Just like general partnerships, limited liability partnerships are not formal entities. But everything that you do should be documented in an agreement. Why? Because the best way to start a relationship is to hash it out before you begin. Now I want to talk to you about the LLC, the limited liability company. LLC is a formal entity that needs to be formed with the Secretary of State. When you form an LLC, that means you're getting together as partners, and you guys are going into a formal agreement. But the beautiful thing about an LLC is you get the best case scenario, you get the limited liability, like the corporation. But you also get the flexibility of being able to have partners, like in a partnership. The good thing about an LLC is that only your investment in the LLC is going to be at risk for liability. Your personal assets, such as your home, your cars, and your vehicle, they are not going to be at risk for liability. That's a major consideration. LLCs are going to flow through to your personal income tax return, and you're going to pay the tax on your personal income. Also, depending on what type of business you're in, LLC are subject to self-employment tax and every single partner inside of that LLC. And they're actually called members, not partners. Every single member inside of that LLC is going to be subject to self-employment tax. LLC also are a very good choice if you're in a high-risk business. And let me give some examples of a high-risk business. If you are in the medical field or when you are in e-commerce business, for example, when you are considering opening an online store, you certainly want to form a business that limits your liability. LLC are good for that. LLC is also a great choice when you're thinking about having businesses where you are going into real estate. It is also a great choice when you are thinking about selling that particular real estate. Limited liability is very, very important. LLC are only subject to 15.3% of self-employment tax. So we're talking about $100,000. We have $100,000. We have federal and state income tax. And we have a self-employment tax where you're inside of an LLC. So just remember, here's some key factors when you're considering whether you should have been an LLC. Whether you should be in a limited partnership, it really boils down to a few things. Number one, what type of risks do you want to take on? What type of liability do you want to take on? How much of your assets do you want to put at risk? Number two, how much control do you want to have? Do you want to be in an entity where you have equal control with all partners? Or do you want to be an entity where you have very little control and very little say over what happens? Also, something else to consider is how complex you want your entity to be. If you decide to form a limited liability company, you have to file a formal filing with the Secretary of State. You have annual filing requirements and other things that require you to do governance. So again, when deciding whether you want to be in a partnership or an LLC, just think it through it. Think about the 3 things that we discussed, and our tax advisors are ready to help you. Simply click on the link below, and our tax advisors will be able to assist you with any tax-related questions you have. We shall also assist with your sales taxes and help you comply with all relevant deadlines. During the call, you'll discover how to make business owner tax write-offs, even if you're a W-2 employee. Why you'll never have to fear any letter from the IRS ever again. Get lost, IRS boogeyman. How we used our simple Law Ask tax reduction framework to help one of Law Ask's clients write off her $200K yacht as a business expense. What's the king of codes, and why does it allow you to legally write off almost anything? I'll show you the process. Why the IRS isn't looking for a specific list of things that you tried to write off as a business expense to trigger an audit, and what they look for instead. How to audit-proof your business write-offs using the Law Ask framework. The difference between how the rich and non-rich do their taxes. Hint, it doesn't have anything to do with the number of digits on your bank account. What the IRS actually is and what it isn't, so you'll never have to fear them again. Talk to you soon.